Hi, Gregory Klump here, Chief Economist for the Canadian Real Estate Association, with more news on national housing activity over multiple listing service systems of Canadian real estate boards for October 2011. Your local realtor can fill you in on what's going on in your housing market locally, where trends may differ from national ones. That said, let's take a look at national results, starting with sales activity. On a seasonally adjusted basis, that is, after netting out normal seasonal factors, the number of homes changing hands in October was up 1.2% from the previous month. That increase built on a 2.7% rise in September and lifted seasonally adjusted activity to the highest level since January. Just over half of all local markets posted monthly activity gains, with Montreal, Toronto, and Vancouver contributing most to the national increase. Actual, that is, not seasonally adjusted national home sales in October were right in line with the 10-year average for the month. Year to date, sales in October are up 1.8% above levels for the same period last year and bang on with the 10-year average for October year-to-date sales. Having looked at the demand side of the housing market equation, let's take a look at the supply side, starting with new listings. The number of newly listed homes remains little changed from stable levels the previous 3 months. So a combination of stable new listings and stronger sales made for a slightly tighter balance between supply and demand in October. Nevertheless, the national housing market remains firmly rooted in balanced territory. The national sales to new listings ratio, a measure of market balance, stood at 53.4% in October, which is up just over 0.5% from the previous month. Based on sales to new listings ratios of between 40 and 60%, about 60% of local markets in Canada were in balanced market territory in October. Of the remaining markets, there was a handful more sellers markets than there were buyers markets. Another measure of balance between supply and demand is the number of months of inventory. It represents the number of months it would take to sell current inventories at the current rate of sales activity. There were 6 months of inventory at the end of October on a national basis, which is little change from the 6.1 months at the end of September. Months of inventory has held steady at about 6 months since last April, so the housing market is holding pretty steady. And lastly, let's take a look at the national average price. The actual, that is not seasonally adjusted national average price, stood at $1 shy of $362,900. That's up 5.5% from October of last year and the smallest year-over-year price gain since January. So where's the Canadian housing market going from here? Well, home sales activity over the past couple of months suggests that buyers are confident that the Canadian economy will remain relatively unscathed by global economic risks and outcomes, since every home purchase is a home buyer's vote of confidence in the future. That confidence is no doubt rooted in the success of coordinated monetary and fiscal policy responses that helped quickly pull Canada out of the last recession, and policymakers' stated willingness and ability to carry out further policy actions if need be. I'll be back next month with CREA statistics for November of 2011, so stay tuned.